Welcome to Tikona Capital's weekly market review for the 13th of February 2026. Let's walk through the key market movements, macro developments, and what investors should watch in the coming week. Domestic equities ended the week lower, driven primarily by heavy selling in its stocks and renewed concerns around U.S. monetary policy. Stronger than expected U.S. payroll data reduced expectations of near-term rate cuts, shifting global sentiment toward risk aversion. The Sensex declined 953 points, or 1.1%, while the Nifty fell 0.9% to close below 25,500. Broader markets corrected more sharply, with mid and small caps down over 1.5%. Early week gains were reversed as selling pressure intensified into the final sessions. On the domestic front, macro indicators remained stable. Retail inflation moderated to 2.8% in January, staying within the RBI's comfort band. Direct tax collections rose 9.4% to 19.43 lakh rupees crore, with corporate taxes up 14.5%, reflecting strong compliance trends. Strengthening regional engagement, India and Malaysia signed 11 agreements across semiconductors, digital economy, and healthcare. The NPCI PayNet linkage will enable OP transactions in Malaysia, marking a step forward in cross-border digital integration. Globally, U.S. non-farm payrolls increased by 130,000, reinforcing resilience in the labor market and dampening hopes of immediate rate cuts. U.S. retail sales remained flat, indicating softer consumer momentum. Meanwhile, China's CPI rose just 0.2%, highlighting persistent deflationary pressures. Diverging growth signals across major economies are contributing to cautious global positioning. At Tikona Capital, we partner with clients across equities, mutual funds, unlisted investments, and advisory solutions, driven by research, built with conviction. Selective strength was visible in industrial and consumption-linked names. Amber Enterprises rallied over 20% on strong AMS momentum and summer demand visibility. Shipping Corporation advanced on freight recovery optimism and divestment hopes, while Godrej Agraway gained on improving margin outlook in agri-input businesses. On the downside, its stocks faced pressure. Aclex declined nearly 19% amid concerns over global client spending. Coforge corrected on valuation sensitivity, while Reliance Infrastructure slipped due to profit booking and leverage-related caution. Our app offers a seamless way to track all your investments in one place, with paperless onboarding and real-time insights. In the unlisted space, clean energy and sustainability themes dominated investor discussions. Power Exchange India is set to launch its carbon credit certificate platform, integrating climate instruments into India's energy markets. Inox Clean Energy expanded into Africa, securing a 570 megawatt portfolio. Investor demand remains firm in names such as NSE, OYO, PXIL, and Inox Clean Energy. Markets enter the week with a negative bias following the recent correction. Domestically, investors will track wholesale inflation and trade data, especially after the record $25 billion trade deficit. PMI data later in the week will signal whether economic momentum remains intact. Globally, attention turns to China's FDI numbers and the US FOMC minutes, along with core PCE and GDP estimates. With macro signals converging, defensive positioning may continue to dominate near-term strategy. As we look ahead, what do you believe will drive markets next week? Corporate commentary, AI impact on it, FOMC minutes, or geopolitical developments? We look forward to your view. As Krishna guided Arjuna, this book guides investors through market volatility with clarity, courage, and discipline. Explore your Sarthi to investing journey at bhagavadgita.tikonacapital.com. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Thank you for joining us. For insights, research, and portfolio strategies, stay connected with Tikona Capital. Wishing you disciplined and thoughtful investing.